If you think the uncertainty when it comes to U.S. equities is going anywhere anytime soon, I hate to tell you this, but it probably isn't. The markets this morning are down. It looks to be 2.5% on the Nasdaq, 2% on the Dow, and 2.2% on the S&P 500. The TSX is probably holding up a little bit better. Yeah, it's only down 0.78. However, the bulk of this decline is coming from some comments that Donald Trump made over the weekend, even late last week, when it comes to Jerome Powell and the overall interest rate situation in the United States. So I'm going to go over what he said, and then I'm going to go over the reasonings, at least in my opinion, as to why a lot of this situation is going to spook investors in a big way and overall just impact the trust and stability when it comes to the U.S. economy and U.S. equities. As always, everybody, there is that report down in the description below on 3 of my favorite stocks in 2025 in this current environment. That list is actually up nearly 20% year to date compared to a loss on the S&P of around 10%. So it's done very well. And I do believe that these 3 companies are positioned to do quite well in an environment like this. So you can grab that report absolutely free. And as always, we're on the path to 20,000 subscribers. So like the video, comment down below, and subscribe to the channel. So what actually happened late last week and over the weekend? Well, Trump wants Powell to drop rates. He wants Powell to decrease rates so that borrowing becomes cheaper, economic activity picks up, the stock market probably sees a bit of a bump. Falling in rates would probably mitigate a bit of this uncertainty overall with U.S. equities, especially in light of tariffs. But Powell does not want to drop rates, and there's a lot of reasons for this. I'm going to get into it in a bit, but first let's go over the article. So I'll zoom in a bit here. President Donald Trump on Monday ratcheted up his pressure campaign on Federal Reserve Chairman Jerome Powell, calling him a major loser and warning that the U.S. economy could slow down unless interest rates are lowered immediately. The thing that puzzles me here is the U.S. economy was not doing that bad. In fact, it was doing outstanding prior to the entire tariff situation, the global trade situation, and this just kind of seems like, kind of Trump's own doing, and his pressure on the Fed to lower interest rates is primarily as a result of what he is doing, which is ultimately tariffs. So he's saying that preemptive cuts in interest rates are being called for by many, which I don't really see. I haven't really seen that anywhere. So it might be a bit of a fabrication in that regard. And he claimed that there is currently no inflation in the U.S. and that costs for energy and most other things are on the decline. Now, although inflation has been slowing, it is certainly not non-existent. I mean, when we go to the inflation rate right now, we're looking at 2.4%, which is down from the previous months, yes, but 2.4% is not no inflation, and it's definitely a situation where inflation could very easily pick back up again. So Trump actually appointed Powell during his first administration, but it went ugly very quickly. I remember him criticizing him extensively back then, and effectively Trump wants him fired, and Powell has, pretty much stated that the president cannot remove him under law. So I'll explain the situation with the Federal Reserve right now. So the Federal Reserve is an independent body from the government. So the Federal Reserve's job is to effectively control the economy through monetary policy. So we're talking money supply, we're talking interest rates, things like that. So their job is to have employment maintained within a reasonable level and have inflation maintained within a reasonable level. So there's a lot of levers they can pull to modify this. They can increase money supply, they can raise and lower interest rates. Ultimately, raising rates would cause the economy to slow down, kind of discourage spending so that inflation cools, and at that point they can lower rates, get the economy operating at a more normalized level, and ultimately just kind of keep tabs on that side of things. They are supposed to be completely independent, no political meddling, because what you'll get with a lot of political meddling is you will get short-term decisions in order to boost the popularity, the approval rate, the overall, short-term actions of the economy, which ultimately can benefit a political party. The Federal Reserve is supposed to be independent on that and making these decisions strictly based on the overall health of the financial situation in the United States along with the economy. So as soon as you have somebody starting to question the independence of the Federal Reserve. And by the way, this would be much the same with the Bank of Canada. Tiff Macklem would be in the equivalent position of Powell. The Bank of Canada's sole job is to maintain the financial stability of the country through monetary policy, money supply, interest rates, things like that. They are independent of the Canadian government, much like the Federal Reserve is supposed to be independent of the U.S. government. So as soon as you start to bring this into question, there's a lot of trust and, stability when it comes to U.S. equities that is put into question, because there is no doubt that these political parties might sacrifice the long-term health of the U.S. economy for short-term gain. So Trump wanting interest rates to come down right now might not be the best long-term decision for the U.S. economy. Clearly it isn't, because they kept rates steady, but the independence of the Federal Reserve is what is supposed to keep things stable. So the fact that Trump is trying to get Powell fired and effectively kind of control the Federal Reserve is going to bring in a lot of questions when it comes to U.S. equities, and you're going to have a ton of volatility because people do not like that uncertainty. So what is a realistic situation that could happen in the event that Trump actually aggressively pushes for the Federal Reserve to lower interest rates and it actually happens? You could get into a situation of stagflation. So stagflation is an ugly situation. You never want it in an economy. And in a nutshell, what it is you have elevated inflation while economic growth is slower and unemployment is high. So when you think about it, if you have high unemployment and slow economic growth, what the Federal Reserve will do is they will lower rates in an attempt to kind of spur economic activity. When rates are lower, more people borrow, more corporations borrow, more infrastructure is built, more jobs are created. So unemployment goes down, GDP continues to grow, and overall consumers spend because it's cheaper to spend. However, if you have a situation where inflation remains elevated, and if we think about how policymakers get inflation lower, it is raising interest rates. So interest rates go higher, which ultimately causes investors, corporations, consumers to scale back spending. They don't spend as much because it costs more to borrow. So you'll see corporations kind of cut back their spending, which ultimately lowers jobs, which could raise unemployment. So in a perfect situation, the economy is red hot, unemployment is low, inflation is high due to that economic spending. The Federal Reserve lowers rates, and ultimately that brings everything back to a normalized level. However, what you could get in a situation like this, let's take, for example, Trump actually succeeds, which I don't think he's going to, but he's attempting to, which is what is causing the uncertainty. He succeeds in getting the Federal Reserve to lower rates. So they lower rates, and Trump's tariffs actually contribute positively to inflation. They actually increase inflation and ultimately slow down economic activity. If interest rates are low at this point in time, the economy is weak and inflation is high, the Federal Reserve is going to have to raise interest rates during a weak economy to get inflation under control. So you have a poor economy that needs interest rates lower in order to spur spending, but you have inflation remaining elevated and the need for interest rates to go higher to tame that inflation. This is effectively stagflation. We have high unemployment, we have high inflation, but we have low economic activity. Interest rates need to come down to spur that economic activity, but interest rates need to go up to kind of tame inflation. So I think that is one of the main fears here, and why the markets are so uncertain at this point in time, that when Donald Trump is aggressively trying to get the Federal Reserve to lower interest rates, but the Federal Reserve does not believe lowering interest rates at this point in time is the best decision for the U.S. economy because of that potential tariff impact. They instead want to see how inflation plays out, and if it continues to rise, they might not be able to lower rates because of the tariffs. This creates a situation where investors are going to be very uncertain where the markets are going to go, because they are very uncertain on the monetary policy in the United States and whether it's going to be politically meddled with for short-term gain. If inflation escalates and the Federal Reserve has lowered rates and tariffs ultimately cause some sort of recession in the United States, the Federal Reserve might be forced to hike rates during a period of economic weakness, which is, you really can't think of a worse situation for a central bank. Raising interest rates in a recession to tame inflation can pretty much intensify the downturn. Borrowing costs are going to rise, consumer spending is going to drop, and business investment will dry up where it really just can't afford to. So ultimately, this is why we see the markets, taking a bit of a step back this morning, not as much in Canada because there's not as much uncertainty in Canada. But overall, this situation is it's going from relatively bad with the tariffs overall to borderline ugly with Trump vocally stating that he wants the Federal Reserve chair fired. He wants to step in when it is not the government's job to step in on the Federal Reserve. And ultimately, this is going to be a standoff that I really don't think is going to go away anytime soon because, as Powell stated, they do not have the authority to remove him. I believe his term is up next year, but this is going to be a situation that you're going to want to keep an eye on, and it's something that could really deteriorate the trust and the stability in U.S. equities moving forward. So that's it for the video, everybody. I just want to give a quick lowdown as to why the markets are taking such a dive this morning. If you like the video, head down below, like it, subscribe to the channel, comment down below. What do you think is going to happen from all of this? I'd be really curious to see your thoughts. And as always, grab that free report in the description below and stay tuned for more great investing content.